everyone. We are doing a video for the weekly close. Just want to give you guys some information that I see and might help you according to your trading plan. We're going to start it off with perps, and I do want to show you CME. So before we kick things off, please, if you haven't already, hit the like button, subscribe button, hit the thumbs up, hit the bell notification so you get the updates as they come out. If you haven't already, feel free to join the Discord server. Link to the server is in the description of this video below, alongside all other affiliate services that we use and recommend that helps us channel grow, like the MEXC link. So thank you guys so much. What we are planning to do today is show you a little bit of differences that I've seen between CME and perps, and maybe that'll give us a guiding clue as to what to expect moving forward. So first of all, I want you to see Bitcoin here on the weekly. It's a bullish weekly engulfing. You can't really be bearish on this. And what was going on is the wick got defended from about a few weeks ago, and an inverse head and shoulders setup that we thought was a possibility is starting to look like playing out, especially since we're above the last week close. So when we close like this in about 12 hours, next week I'm looking for continuation into the $65,000 resistance. And keep in mind that next week, Wednesday, is the Fed meeting. Everyone knows there's going to be a cut. People will be front running it. People are excited to get into that market before the cut, looking for the upside push. So yeah, shorts are gonna have pressure on them as retail and everyone else are rushing to get into markets at whatever price it's at, so they can catch the ride to the upside, which they are expecting. No guarantee, they are expecting. We don't know. I have my own thesis on what's gonna happen with the Fed rate cut on Wednesday. I've shared it with everyone, and I'll maybe reiterate in the end of this video. But for now, let's just look at the price action. So price action wise, bull flag, bullish engulfing on the weekly. Everything looks good for continuation upside. The 43K area did not get tapped, but you did get the tap over here, a little bit under 50K in this order block, and it was defended extremely quickly. You can't, it is what it is. The buyers do not want it to go under this level. They defended it. Maybe it was Mr. Saylor himself, whatever, but we'll see if the buyers hold and continue buying. If people assume that no, this is not the bottom, they will take profits and you will see the rollover into Monday open. Okay, but if everyone thinks the bottom is in, they will ride it up to the upside. So the weekly looks good. Now monthly is still a little iffy. You're underneath the last monthly candle, so the month after September, like beginning of October, we can see a trickle down. So just keep that possibility open, but I do think upside is a little bit more likely because of the fact that we had a very large sell-off, and buyers have time to trickle back in before another big seller comes to offload his spot. So that's one thing I wanted to point out on Bitcoin on perps. Now let me show you Bitcoin on CME. And you can see CME is doing good. We are actually looking the same thing on perps with that bullish engulfing. Wick defended. This area was defended. We had such a tight consolidation that right now Bitcoin's range is like a few $1,000s, like $5,000. Let me turn the drawings here. This is what we were looking for. We were looking for that 56.30 to 46.70, 50, like this range from here to here to scoop up along. And that level is being defended really, really nicely, this 56,000. And as long as 56,000 holds with all the open and closes, we're looking for us to break into the resistance, which is 61.2. We're doing that now, and beyond into 70K and so forth. Now, if you look at perps to CME real quick, you can see CME and perps on Bitcoin are basically flat. But on ETH, we have a little bit of a premium on CME as to spot. Also, ETH was the laggard on the weekend as well as last week. It was Bitcoin leading and ETH followed after we saw the money coming into the alts. So keep that in mind. As you see people take profits in alts, you will probably see ETH trickle down. But this little bull flag consolidation is looking good for upside continuation, so that's a good thing. Now, all that aside, ETH, let's go take a quick look at ETH now on the perps. You can see ETH is not doing as healthy as Bitcoin in any way, shape, or form. Here is Bitcoin, bullish engulfing. Here is ETH, bearish, and trying to fight that last bearish candle. Still got 12 hours. If Bitcoin has upside continuation, ETH will probably get upside continuation, like to fill out this shoulder here. Let's say this is a head and this is the right shoulder. Well, your right shoulder has a little bit of a top over 26 to, you know, 27,000, and then the bottom over here around 2100, and we are basically poking into that bottom. So be aware that this week we need to see how ETH plays out. But the good thing I can say is the fact that ETH got its profit back up from the miners, like the fees, that is a good sign that, hey, the stakers are not going to just abandon it, and that they might have a chance to figure out their incentives so that way the people continue to hold and stake. I don't know if the incentive issue resolved the inflationary situation with the supply of ETH, but once that inflationary supply of ETH gets situated, then we can look for upside continuation in a scarce asset tokenomic pumpamental model, which as of right now, I can't be confident of saying that with ETH unless there's a major use case as well as a deflationary tokenomic model. Okay, inflationary is like $1. Why would you want that same currency setup? So just keep that in mind. So the whole point of this whole video, okay, the whole point of this video, it wasn't to show you Bitcoin is bullish and Bitcoin is flagging and all that. It was to show you the weakness on ETH, on perps, and now I'm going to show you even a worse situation, the CME. CME, here it is. So I don't know if you can see the difference. Here is CME, here is perps. Here's perps, this bearish engulfing impulse that we had, that we dead catted, bounced into, and rolled over. And why I was looking for that dead cat, here is ETH, boom. So this is my biggest concern on ETH, is this big gap right here around 27 to around 3,000, which was our resistance on perps. Now on perps, your shoulders are a little bit wonky because the right side is higher than the left side. This side looks equal with that gap over here, which was basically caused because CME closed and then that impulse occurred, and then when CME opened, we never filled that gap. So this gap here is something that I would like to see tested before I say, okay, we're rolling over and falling to lower. So that's what I'm targeting this next week to the end of the month into the FOMC. I am long. I'm just letting you know right now. I am long, but I do have a hedge short for 2,400. Anything under 2,400, I am bearish. Anything above 2,400, I am bullish. Now 2428, we're right there, right? So I know my short is gonna be extremely ugly and unlucky, but I will add to my long once we see the reaction here, and I will ride it up to higher levels, and I will leave that short in the dust forever if I have to, while compounding my long into like quadruple or 5 times or 10 times the position of the short, because I'll leave that insurance running forever. But the long I will add and get out with that short running in case that we do come into this level and roll on over and take out the lows. Okay, something like this has happened before in this area. We basically pretended like we put in a bottom right here, bottom, and then what did we do? We engulfed to the downside. Okay, twice. Once people thought, hey, we're gonna come fill it. We never filled it. We just engulfed to the downside. So same thing here. You know, this same setup over here is happening right over here. Okay, we gap down. Everyone is looking for that gap fill. But if we don't gap fill and we do another gap down underneath this $2,200 level, I will not be surprised to come into this $1,500 level with the gap down on bearish sentiment of ETH. Something like this, these levels here, I will say that it would come after Wednesday, because a lot of people have a lot. Okay, and here's my conclusion on the CME thing. I mean, FOMC. The world and the market is pricing in a 0.5 cut. And it's at least 50% of the market is assuming that they are going to get a 50 basis point cut. When we get a 25 point basis cut, all of those 0.5 traders will instantly adjust their position on the news of 0.25. And even though the cut is actually a upside push for the market, it might be to fill shorts on all the people trying to push the Fed to cut the 100 basis point cut before the year is over, meaning they're going to put pressure for the Fed to cut every meeting past the one that we're about to get on Wednesday. Because they didn't do 0.5 and they did 0.25, they're going to push the market in the direction where the Fed is forced to continue cutting every meeting left for the rest of the year. If that does not happen, the market will again punish until it gets what it wants, because it's already pressing in 0.5. If 0.5 don't come, you obviously have to adjust for the surprise to the downside. Once you come to the downside and you're expecting the next cut, if the next cut don't occur or whatever, if the Fed decides, hey, it's an election month, we don't want to do anything in November, we'll wait for December. Well, market will adjust accordingly, okay? The good news on this situation is that in the history, backdating, every new president, didn't matter who it was, always caused the market to rise, almost like 8%. Okay, so I don't want you to think that, hey, upside is not possible. I'm just pointing out the red flags that I'm seeing, and I'm showing you confluence with the price. Like, price can show you what happened in history. I can't tell you what the future is going to bring. I'm just going off what has already happened, and I'm showing you those confluences. Like right now, this little expanding wedge is on the bottom of the expanding wedge. We should use this as a bounce point for expansion straight out. If you can see, this is the rising trend line. This is the support, and it's an expanding wedge up, down, up, down, up, down, and now it's looking for that breakout. The breakout, I want to see the reaction around here around 3,000. If 3,000 gets buttered and we get up to 36, when we roll back over, 3,000 will be support. We won't have to look at this gap as a resistance. We want to flip it into support, like this. This was resistance, this was resistance. What happened? We bullish engulfed, used it as support, continuation. Rolled back down, used it as support. This was all support, impulse. Come back down, use all of this as support in a bullish triangle fashion like this. This all became support for continuation back up. All right, so this is what you need to basically keep your eye on. And the possibility of this impulsing over here is there, but I mean, what we're doing is we're coming and testing into this level here, which is basically the bottom of an expanded wedge. Will this play out to the upside? That's what we're waiting to see. So this is what I wanted to point out. The gap is there. You have a premium on CME, 24.28, and we're at 24.06 on perps. CME is going to open in about, what is that? Actually, here, I found this out. You can click this. CME is about to open in 10 hours, okay? So in 10 hours and 25 minutes when CME opens, obviously you should be expecting a reaction, and we'll see how that plays out. Right now we have a space to the upside, so the gap might be going to the upside, and then once that gap fills into 24.28, we can see if we get above it or if it's an instant slap back into 2400 and under. And that's basically what we're waiting to see today on Bitcoin and CME. Last little thing on Dixie, we went to 102 and we got slapped right back down to 101 after ECB gave their 0.25 cut in Europe. So if Europe is cutting, that should give dollar a little bit of strength And then when dollar cuts on Wednesday, that will bring ECB and dollar into equilibrium. And then you will probably see yen take effect, and whatever Aussie dollar take effect of that change, because we're trying to devalue the dollar with the cut. We're gonna be basically we're trying to stoke inflation, because inflation is at targets. So we're trying to like increase it in a sense, so that way we can have more monetary flow in the economy, and that's how the government gets taxes. As people make more money and spend it, they're going to tax it, and then everything keeps churning. So right now, Dixie, we are at the 101 level. If we lose 101, we can talk about other things. I mean, I've had a very long-term view that Dixie is going to go higher. And right now we are breaking that model. So it is doing a much larger rounding bottom than I thought. So I have to wait and see the, like once we have a clear direction, either under 101 or above 101, we'll be able to have that relationship with Dixie and crypto come back, either inverse or not. Right now, this indicator has become useless to me. And until I have that relationship again, I'm just gonna let that be. And just wanted to point that out to you guys, that Dixie is basically useless at this point. And aside from crypto, I guess we can quickly look at indexes. Let's look at ES, SPY, and DJ, and then we'll call it a day. Okay, so ES1 on a monthly, you're at the tippity top. You have a bearish candle, but you have 15 more days. I don't think you are not gonna take out the top, because the Fed cut is coming, and more than likely this thing is gonna just the higher lows kind of like, what are you expecting downside wise on this? 52.70, and then that might be a buying opportunity on the wick. So you really need to see that, like, even the candle on monthly is above the body of last month. I can't be bearish. Like, this is setting up for it actually getting into 58 and beyond. So yeah, there's your bullish engulfing. You have everything looking for upside right now on US equities. Probably people front running into the rate cut. We were looking for this to come maybe as low of here, and it would be a buying opportunity. It's been so shallow. So the market is actually on S&P fine for upside as per my view. SPY, I mean, Spider is doing the same thing as ES. Here is Dow. Dow is doing exactly what we also had. See, we were looking for a buy off of around 39. We had this a few weeks ago, and then we were just eating the resistance here at 41.8. This is where we were expecting a rollover. That's what this bearish triangle is. You have bearish divergences, but I don't think we are gonna break the lows, because the trend line of this yellow is still holding. The retail trend line is still holding, but you do have massive buildup of bearish divergence. I just don't have faith that the bear div is going to play out before the Fed cut. I would assume everyone is front running the Fed cut, and then after the Fed cut is when people will either take profits and take hedges of shorts and stuff. So this I would just let go of. This, you can move it over here, but it's pretty unlikely that, like, this whole analysis has to be redone, because this is coming off of the lows of this level here. This is not the low. The low is like over here now, off of this green channel. So I have to redraw all this stuff. So that's what we'll do. Once markets open, we will probably look at a video of US index next week, maybe Monday, Tuesday, and we'll follow up with some stocks like Meta, Apple, Google, maybe QQQ too, and then we'll do some crypto as well. Everything looks the same. All the US indexes all look like it's gonna go upside. So QQQ already hit that 502, did it? Yeah, it did hit the 502. And I was looking for a buy off of 412. 412 to 403. So let's see if we get that opportunity. Right now, the short is setting up on all the indexes the way that I was. Even this is bearish divergence, man. This was where I wanted to take the short to 412 and under. So I don't recommend shorting yet. I would wait for the news, and once the reaction of the news, you can short on weakness if you find a bear div. Here, once again, on higher time frames, I was looking for lower, but I do see that, hey, the possibility of putting in a bottom is there on ETH and Bitcoin as well. Possibility on Bitcoin is much higher than on ETH because Bitcoin is holding midline. ETH is actually on the bottom, so ETH is oversold. Bitcoin is actually showing you some strength of a bullish bounce off of like median averages, but ETH is on the bottom. So ETH has the bigger opportunity for upside if the stuff gets fixed. Bitcoin will probably corroborate the upside with just not showing weakness. As long as Bitcoin don't show weakness, then ETH will have that room to have the upside. If Bitcoin shows weakness, then it won't matter what ETH is trying to do because the leader of the market cap will drag the rest of the assets down. And yes, there's a little bit of bearish divergence here. I would just be very, very patient for that to either that get negated or played out, and it's going to happen within 15 days into October. So things are spicy. Things are spicy. Upside on weekly is more likely, but the weekly closes in 12 hours. Once that 12-hour closes and a new weekly candle opens, if it starts showing you weakness and starts bearish engulfing, it's probably just to shake out longs as it tests the bottom and then reverses into New York Open. So Sunday's going to be rough. Don't get psyched out Sunday. Be patient for Monday New York Open. More than likely, the market euphoria and upside continuation will be there on Monday into New York Open if you are patient enough and are able not to be over leveraged and kicked out of the volatile like liquidity grabs in the meantime. So that's your goal. Stay in your position. Don't get over leveraged. If you have to hedge a short or hedge a long for the opposite counter trend, do it so you don't get liquidated and you are straddled until the volatility is over. And then you could X out of the losing trend side and let the winner run kind of situation. So I'm straddled within $50 within ETH price action. It don't matter if we go up $1,000 or down $1,000. I'll make money regardless, as long as I click out of my losing position. So let me give you an example. So say I'm long and short on this candle. I can have a stop loss on either side, and whichever side gets wicked out, that's fine. Knowing that the likelihood of an inverse head and shoulder on RSI might play out on price action on weekly. Here's your daily. Daily is showing you are doing higher lows on RSI, higher lows on price action, and you're actually doing this stair step like 1, 2, 3, 4. Fifth wave is the highest, 6, 7. So the fifth Elliott wave impulse is what we are basically lined up for. If you can see it. See, this is 1, 2, 3, which was a decent impulse, by the way. The wave 3 not only was a nice impulse, it broke the resistances of the 2400 for the monthly resistance, and now we're basically we're on, was it 3? This is 4, a retrace, sitting on the 2400 monthly support. Wave 5, which is about to come after 12 hours, can be a straight impulse up into the next level of resistance around 26 to 28, was it? Yeah, 26 to 28. And then wave 5 can come breach this, wave 6 can come use this as support, and wave 7 can do that last grab of liquidity. And then all we did in all of that action was just fill out the order block in a sideways consolidation. Meaning like bigger traders are looking at this as a sideways, while lower time frame traders are thinking moon and doom shit. So just be aware that all we're doing is just consolidating sideways. We're filling out the we are filling out the bottom and confirming supports as we stair step up, escalator style. Now the rule is escalator up, elevator down. The elevator, I don't think is going to come until we take the liquidity out over here at 2600 or at 2820. Other than those two levels, why would you have an elevator down without collecting the liquidity and the stops of all the people that are at those levels? There's major liquidity at this level here. Look left. This resistance here at 2820 is why we couldn't break above this level here. Okay, this was resistance flipped support. If you can, do we have it on the drawings? No. Okay, let me give you a quick horizontal line right there. So this level, look at the respect from the price action on that level right there. If you just zoom out, it was resistance. Okay, we couldn't get above 2800. We couldn't get above 2800. The second we got above 2800, look at over here. We had a bull flag consolidation. Okay, like I've shown you on ETH, on Bitcoin. This is what we retested on the bull run, and complete expansion out of that. So this move off of 2800 went all the way to 4100. That was a 50% pop. Okay, and it was in like 10 days. 20 days, whatever. The point of the matter is it was very short after a very long consolidation sideways. We're doing the exact same thing again. Very long sideways consolidation. If we want to pop, once we get above this level, the next level of resistance, you see all this fast move on red? Fast move down, fast move up. It's probably going to go right back to 32 to 40 or 32 to 35. And we can consolidate here, up, down, and then go back up into higher levels. Same angle here. You should be expecting that same angle back up in a V-bottom fashion if everything is peachy keen and smooth, price action wise, okay? If the buyers have lost faith in ETH, we won't get above 28. We won't even get above 26. And you will see us try to like impulse straight back down after 26 to 28. So that's what I wanted to point out. That's what we're looking at on ETH. On BITI, 57 is the line in the sand. If you can get under 57 again, 57.3, and you start having 4-hour open and closes underneath it, what that means is you bearish engulfed this bullish candle. You bearish engulf it, then that means this is another lower high in a sequence of lower highs. Yes, it looks like a beautiful channel. Yes, it looks like it wants to break out. That's not the right one. You want to see this one. Yes, everything looks good and bullish for a breakout, but price action needs to get above this level, right? Or actually, was it 65? No, it was 61. It needs to get above 61.3. Okay. If not, if you get back underneath that 57.3, this becomes your resistance. Then this will become your resistance, and then you will be looking to do just quick move down here. Like these wicks that were here were not just for show. You can come and fill out this lower bottom and make a nice big rounding bottom. It doesn't need to break 46.7. 46.7 is a buying opportunity. But this level here did not get no fill. It just got wicks. The bodies, are all staying above this level here. All the bodies are staying above this level here. So coming into this level here is a buying opportunity, and it's proof because of the wick. So coming into this level again is not a fear, or you shouldn't be like looking for instant downside. Coming to this level would be basically just filling this wick in a test of bullishness for upside continuation. I would not get bearish if something like this happens. Okay? It's just to shake out people, in my opinion, for upside continuation to come. So that's basically all I have for you guys today. I don't want to get too much in tinfoil theory. I gave you my hypothesis. I gave you what my thoughts were. This was the gap that we're filling right now, by the way. You see this little gap over here? That's why I had that. So this little mystery gap is what we are trying to close above for upside continuation, but you're finding resistance there. So between this gap here and between this gap here are the two levels to basically keep your eye on, and one of them levels is gonna either break or like, you know, it's this is resistance, this is support. Which one is going to break? Whichever one breaks is going to be the trend of the direction. You lose this support at 51K, yeah, you're going to go to 46, 47. You might even come into my entry here at 43, 40K. Okay, that's where I'm looking for my long right here. For full disclosure, 43,400, that's where I would like to take my long. Do I want it over here? I would, but I don't have confidence that, hey, all my fibs have not been tapped. Why am I taking a trade in the middle of air? This is MIDAR air. So, you know, it is what it is, guys. You do what you want to do, but just be aware that I charted these levels months in advance. They are being respected. If you don't use information that you're given for your advantage, what's the point? Are you a gambling, praying, hoping kind of guy, or are you going to use math to your advantage with stats and probabilities, risk management, etc.? So ask yourself that stuff, and then yeah, if you have any questions, hit me up in the next one. Please leave a like, subscribe, press the bell button for notifications so you get the updates as they come out. If you have any questions or concerns, leave it in the comment section below. Don't forget to like, subscribe, press the thumb button for notifications as they come out, and leave me a comment in the comment section below to let me know how I'm doing and if you have any questions or concerns. Thank you so much, and I'll talk to you soon in the next one. Adios.